Hello, I'm ESG Clarity Deputy Editor Natasha Turner, and welcome to another video for ESG Clarity's US website. Today, I'm delighted to be joined by Whitney, Voute, Head of Investor Relations for the US Solar Fund. So thanks so much for joining us today.
Thank you so much for having me.
So just to have some context, what's the sort of state of solar, the sort of landscape for it in the US right now?
It's a really interesting, exciting time, and also it's a fun time to be working in the space because it's constantly in the news. There's been a lot happening in the regulatory space. There's a lot happening in sort of the ESG space as well. So solar in the US is at an exciting moment. For that, there's still a huge amount of growth to be had. It's an enormous market. I think it's around 3% penetration at the moment, and will need to be significantly more if we want to reach our goals around 2030, 2035. So it's exciting to be here for that. It's also exciting in terms of technology. Battery costs are coming down. There's a lot of talk about interesting opportunities around battery storage attached to solar projects, which would make solar a huge piece of the puzzle in terms of moving toward more renewable energy sources. And also, it's actually worth mentioning, even before all of this, even under Trump, for instance, the cost of solar had come down in the US so much that it was the cheapest form of new build generation in a lot of places, maybe not in the whole country, but for a lot of a big swath of it. And so even without subsidies, even without the new initiatives with the Build Back Better plan, even without battery costs, solar was already gaining a ton of momentum and a really exciting space to be.
What other things are we likely to see, or what else is it going to take to increase interest?
I think there's another really interesting piece of the puzzle that actually happened under Trump, which is that because the US left the Paris Accords, because the federal government, or the leadership of the federal government, didn't seem to be so concerned about climate change, a lot of corporates stepped up and a lot of states actually stepped up. So there are state level subsidies. They're different across different states in the US, but they are a really interesting piece of this puzzle. And then there's been increasing interest in corporate offtake. So you can have, in the US, off-takers are the groups that buy the electricity from your solar farm. And they can be anything from a corporate like Starbucks to a university to utilities, which often happens as well. But it just seems like the whole ecosystem is all coming together to support the growth of the industry.
And with that, have you seen a change in interest for your fund in recent times, either or different areas of demand?
Absolutely. So we IPO'd in 2019 on the London Stock Exchange. We had a follow-on capital raise in April and May of last year. Both were really successful. The follow-on capital raise was significantly oversubscribed. And one thing I think that was super interesting about it was the initial capital raise, as IPOs often are, was supported by large institutions that are very active in the space, very mature investors. And over time, we have seen significant retail interest and a lot of wealth, like the wealth platforms coming in as buyers, which is really exciting. I think the institutions in the UK and Europe have been leaders in this space, in the sort of ESG sustainable investing space. And you see now the retail support as well. And so one of the reasons why we actually listed in London is because of that sort of investor desire, will, and maturity and knowledge in the space. So yes, the shift to introducing more retail or wealth management platform individual investors is really exciting.
Great. Well, thanks so much for joining us today.
Thank you so much for having me.